Hi, everyone. Good afternoon or good morning, depending on where you are in the world. Thank you for joining us today for our forecasting and budget planning in 2023 and beyond. Really excited today to have featured speakers with us, IDC analysts. My name is Elise McFarlane, and I am a PMM for Sage 300 in the US and Canada. So just a few things before we get started. You're all muted. If you have any questions, put them in the question feature. We will try to get to them at the end, and this will be recorded. So we will share that when the webinar is over. And so please feel free to watch it again or share it with a colleague. So with that said, I'm really excited to introduce you to IDC. IDC has more than 1,300 analysts worldwide. They offer global, regional, and local expertise in technology and industry opportunities and trends in over 110 countries. So our featured speakers today are Kevin and Mickey, and I will let them introduce themselves to you shortly. Kevin?
Yeah, Kevin Permenter, Research Director here at IDC. My coverage area is the financial application. So that's everything from your small business accounting apps through to the big multi-million-dollar ERP financial suites, and then into the key point solution areas like accounts receivable, accounts payable, expense, tax, treasury, of course, a little bit of FP&A. So excited to be here.
Awesome. Thanks, Kevin. And now, Mickey, could you tell us a little bit about your research at IDC?
Sure. Hi, Elise. Thanks for having us today. It's really nice to be here. So I lead an esteemed group of individuals covering enterprise software, ERP, financial applications, professional services automation, employee experience, HCM, EAM and smart facilities, procurement, talent acquisition strategies, and digital commerce. So very, very happy to be here. Excited about the topic area here. So thanks so much for inviting us both. We appreciate it.
Awesome, thanks. Yeah, we'll get started. We have a couple things on our agenda today, a fireside chat. So I'll ask a couple questions, and then we're going to get the analyst point of view, which I'm really excited to hear all about. And then, of course, the Q&A at the end. All right, fireside chat. You're going to see this slide for a little bit because we're just going to ask some questions. But my first question for both of you is, what goes into business forecasting and budget planning?
Kevin?
Yeah, look, it's a collection of data from all the different aspects of your business. The main sort of point that you have to get to for that is that it's really it forms the financial plan. When done correctly, it forms both the eyes and the ears of the company going forward, right? So the eyes so that it can see, the tactical plan, that's that 1 year plan, the operational plan, that's that, 2 to 5, 2 to 3 year plan. And then even beyond that, the strategic plan, being able to gather all the data points into the right place at the right time, get all the insights and sort of the color from all the different stakeholders involved in the financial plan, getting the right sign-offs and buy-in. But again, the reason you do it is because it forms the eyes and the ears of the company, allowing it to sort of see and anticipate, changes in the market, changes in the competitive dynamic, be able to compensate for those kinds of things. And then, of course, yeah, it gives you the ears so that you can always do, constant, sort of evaluation against that plan as a year moves forward, so that you can kind of catch any sort of internal deviation as it happens or as close to real time as possible. So it really does form the backbone of the financial operation in any particular, year.
Kevin, I totally agree with you. If you don't mind, Elise, I'll just add a couple sentences onto that. I also think that, in many years of doing it, so many companies across the globe that both we interact with at IDC as well as in my practitioner days and former life, it's always been about rolling up spreadsheets and putting data together, and there's always some sort of error in the data and whatnot. So, as the title of this webcast, I think, brings forward is around 2023 and where companies are going and beyond. It's more about this digital world and seeing the data in real time and getting past static information. And as you get new inputs, or your business goes through some M&A activity and you bring on a new company and scale, or you actually contract and do something different, it allows you to zero in on what decisions have to be made, because the insights are telling you and glaring at you, wow, we have to do something different.
Great. So you kind of the eyes and ears, and then as insights or as things change. So the next question is, what is the frequency that, businesses should be doing this?
Well, look, we've seen this typically, being done once, maybe twice a year. But with all of the disruptions that have become sort of the norm, I mean, I can't even count the number of times I've said this is unprecedented in the last, 2 years, because unprecedented things just keep happening. And if that keeps happening, then you kind of think that unprecedented stuff is sort of the new normal. But to say all that, I say, what we've been seeing when it comes to forecasting, budgeting, and planning is that, these things are now becoming much more frequent. These exercises, although complex, although resource intensive, are now being, sort of done, or being, the CFOs and CFO and CEOs are asking their teams to do these kinds of things now more frequently. So even like on a biweekly or weekly basis, we've been seeing. So think about that, from twice a year now to like maybe twice a month or even weekly. Is the new normal when it comes to these kinds of things.
Yeah, I totally agree with you, Kevin. I mean, if we step back and we look at, the interest rate changes that are going on, stemming the tides from inflation, and, heaven knows if we're in a recessionary time frame, as organizations keep going forward here, you always have to look backwards to determine a recession, no matter where you are, right? But the point is, if things keep changing and all the dynamics are there, you really need to keep redoing this and understanding, what does it mean? Where do we need to go? How are we going to get there? Do we have the right resources? Do we need to shift something? What happens if this happens or that happens? So getting into the predictive side of it. So, I think the point is, it's becoming a continuous process, no matter how you look at it. Right?
Yeah.
That good word continuous is becoming, sort of a buzzword. And that puts incredible amounts of pressure on your tools and your processes to allow this sort of frequency.
Yeah, and you know what, Kevin? Don't you realizing a lot of the tools that are out there right now can't even sustain this?
Yeah,
Right?
I think when things hit the fan, during the height of the pandemic scare, you know, what folks found out quickly is that their systems weren't built to be as agile and flexible as they needed them to be. So what happened was a lot of augmentation with spreadsheets, and that's sort of a dead end street. We all know that. So yeah, the tools are just now sort of catching up. We're seeing vendors put a lot of focus on advanced technologies like machine learning and AI to help folks cope with that new normal of this higher frequency forecasting efforts.
Definitely. Change is the only constant, I guess, and the frequency is certainly happening. So if budget and planning is happening more frequently, you need better tools, or you need different tools, or a combination. Has that changed what happens then for, right now it's calendar year end, it's fiscal year end for a lot of people. Does that change what has to happen, or what are the requirements for the year end kind of portion of budget and planning?
Well, I mean, for those that are mature enough and have the tools and the mindset to be more predictive and to move to more of a continuous sort of approach, then no, this doesn't change. The end of the year is no different than the end of the quarter, which is no different than the end of the week. All of which are points of sort of are points where companies can close their books and move on to the next period. But in reality, for most companies, the mechanics of setting your sales and liquidity and capital requirement plans is still a very heavy lift. I'd say the one thing that is a common, whether you have advanced technology or not, the one common thing for me is that the essential element is communication. You need to have excellent communication from all the stakeholders, from finance, HR, supply chain, all of which has to contribute not just data, but insights to be able to drive the plan. And I just want to say one thing here, which is really important. The idea of the plan isn't just to sort of complete the plan. It can, once it gets to be a certain level of complexity, the goal is just to get through it, right? And we've all been there. But if we can collaborate and communicate and share not just data, but also color and insights around that data, what you'll get is a plan that's accurate, right? Or a plan that is much more representative of the current state of the business versus the current state of the market, right?
Yeah, that's well said, Kevin. I think there's another couple points about this year-end timeframe. As Elise said, this is traditionally the timeframe organizations go down this path to relook at their plans and whatnot. Considering the economic environment that's global right now, geopolitical aspects, what we call the storms of disruption, what we're really facing is the fact that these change daily. So some organizations are looking at, gee, how many employees do we have now, and are we going to need them all in the future? And as we go into new territories for sales, or we're bringing up a new building, or we're bringing down a building, what's the impact on our overall investment strategy? Are we selling something off? Are we bringing something in? Do we have the right technology to help us get there? If we have a manufacturing facility, or if we're in a financial area, are we tied in and lined up the right way? So there's some real active and good conversations going on, as Kevin just said, and the color around it all comes forward from the insights that are there. But having that right in front of you from a dynamic standpoint, and then being able to plan and do some what-if scenarios, it makes it a lot easier, because then you can stand behind your plan, you can shift as things shift, and it isn't just, as Elise, as you said, this time of year. It then becomes something that you can just keep moving forward with and roll into the next years as you go forward, months, weeks, or break it all down to however you need to. So you're running your business to the best extent possible, and you're shaping it to where you need to go.
Yeah. It's the old saying, the old boxing saying, right? No plan, lasts past the first round, right? Like there's always going to be some element of change, but good plans are typically able to bend and sway, but maintain their shape. And the only way you build those good plans is to have good insights and good input. So that's the real key.
Oh, definitely. So I think I even heard a lot in that last kind of question, what leads into our next one, some of the benefits and challenges. Like, yes, things are changing rapidly. Yes, there's a lot going on, but we are all more adaptable. Businesses have been making these changes. They've been thinking, maybe not less long term, but in all sorts of ways so that they can adapt. So can we just click into that a little bit more? Are there specific challenges or benefits to businesses right now?
Yeah, look, on the challenges front, not to start in the negative, right? On the challenges front is that more and more these forecasts need to be inclusive of macro external factors, right? It used to be, when things were a little less chaotic, that you could predict certain geopolitical hot zones and those sorts of things. You can kind of predict. You can have there was some predictability to it, but if anybody, going forward now in 2022 is a great example. Who had a potential nuclear war in Europe on their bingo card starting the year, right? Now you make your plan at the end of 2021. You have to now bring in not just competitive elements, not just sort of your hiring and sort of um, you know the resource allocation that you're going to bring, your capital requirements, but now you also have to include all of these macro elements. You start bringing in things like supply chain risk, and some of these macro elements that are shifting so quickly. Then now you run into a situation where your already complex financial plan for the year, or for the period, what have you, it now needs to be even more complicated. And now you need to be able to work in external data sources, currency data, of course, because it's shifting so quickly, macroeconomic data that also is shifting as we speak. So it's just really, really a difficult prospect right now without the proper tools.
Yeah, Kevin, you really said all the dynamics that are shifting, and I think that's the important key point here is that it's no longer about static information, it's dynamic, continuously change information. And at least you said at the beginning of this webinar, right? Change is a new dynamic, right?
Yeah, and look, one more challenge is that although we've been writing that the world is shifting away from spreadsheets, we've been writing that for the better part of a decade here at IDC.
Yep.
The transition is not complete. There's still tons of important decisions, especially decisions that are cross-departmental, where there are different sort of rivers of data that have to be put together. When you see those kinds of things, the financial close, the budgeting and planning process, you see those kinds of nexus points for information. That's where you see the rise of the big, huge honking spreadsheet or the series of spreadsheets, and then the challenge there, is to all the complexity that Mickey talked about and I said earlier. The limitations of the spreadsheet and the inherent sort of complexities within using a spreadsheet for some of those complex areas is just too much.
Definitely. Do you think, for the small to medium, so let's say 20 to 300 employees, like do they have any special considerations, like the spreadsheets are more prevalent in maybe that space or less, I guess, depending on how dynamic they are in tools and technology, but are there, for that size of business, are there any specific considerations, do you think?
A lot of times, smaller businesses don't have the technical debt of, dealing with mainframes and some of the old stuff that folks are green screen stuff that's still around, right? I was recently at conferences talking to end users that are still working, selling things, and at the core of their financial solution is the core of the financial operations is a green screen, right? So it's a lot of small businesses don't have that technical debt. The problem is that the storms around them, because of their size, just make them more susceptible to the market shifts, right? So just like a small plane. Mickey's a pilot. Not to give that away, Mickey. I think it's kind of cool.
No
But
worries,
Mickey's a
Kevin.
pilot, and small planes, they shift more. They're more susceptible to the crosswinds and the tailwinds and the headwinds, right? So because of that, you'll find that smaller businesses probably have to be even more dynamic when it comes to their plans, their planning processes, doing it on an even more frequent basis, or doing it at a broader level more often.
Yeah, I would agree. I would just add one more context in it. Many times they don't invest in the tools they need to make their jobs easier. And the more investment they can make, they can reduce some of these data collection, spreadsheet type factors that are so prone to errors and having you make the wrong decision because they're so static and they're not dynamic. So I would just add that, because I think that, you know, you may be smaller, you may have less employees and that type of thing, but one wrong thing can have huge implications for the business, even put it out of business. Hate seeing things like that, right? I mean, that's the last thing you want to do.
And look, a lot of businesses, I hate to be like this, right? Because I guess I've been a Debbie Downer this whole time here, but I'll continue. A lot of smaller businesses, you know, a lot of great small businesses. When I say great businesses, I mean, you know, you know, a great product, great set of people, right? You know, an excited customer base. A lot of businesses like that still go under because of, you know, cash flow planning, right? Or, you know, liquidity planning and sort of lack of cash, right? So, you know, to Mickey's point, like these things are they're not trivial because there are fewer people. They may even be more important because there are fewer people, and the winds of change, you know, sort of happen faster in the small business.
Definitely. I think having or using the technology you may not think you need it in a small business, but you do, like that is
Yeah,
the time to help set, you know, the process up to be able to focus on things like that do matter, the cash flow, the liquidity, like those are, you're right, in small businesses super and mid-size, important, that may not get the focus because they're not as exciting as, you know, the sales and marketing of whatever great product or service they have. When you're that size, you kind of you're focusing on that more than anything else. That's great. And that leads, again, we're following the flow, but like that does lead into, you know, trends. Are there trends? And we did talk about some of the macro and how we couldn't have predicted anything, but are there, you know, market trends or trends in business, you know, budgeting and forecasting that people should be
yeah.
aware of?
Sure, I'll get started here. For me, it's all about data management. So we're talking data hygiene, being able to pull in clean data, being able to clean the data that you have, and being able to process that data and find the insights. The entirety of this process needs to be built upon insights that are, you know, driven by the transactions that happen throughout the year. So shortening that distance between, you know, the transaction, right, the patterns inside of the transaction, to the insights that you need to drive, you know, accurate plans and sort of robust plans. That comes down to data management. It comes down to data management tools. Think integration tool software packages that connect the big, you know, that may embed functionality within some of the your system in some of your systems, or the APIs that allow data to move back and forth seamlessly between systems. For me, data management tools are incredibly important. And then once I get all the data into a place, it's clean, data hygiene, it's all good. Um, and now I need machine learning and AI to help me crunch the data, and not just crunch the data that's internal, but like we said earlier, bringing in, weather data, bringing in credit data, bringing in sustainability and ESG data points, right? Scoring and ratings around that for your supplier base. All of those kinds of things now have to be part of a robust plan. And you just can't get there with, people unless unless you just go to NASA and get everybody to line up and take a couple of days off. But for the most part, you're going to have to utilize the tools of machine learning and AI to help you do it.
Yeah, Kevin, you really hit on the big nuggets there. I think if I were to just simplify it from my end, it's really about
Mhm.
connecting with other systems so you can get at those data sets that are kept clean and the way you need them. It's allowing the organization to crystallize more information, collaborate with each other, right? So that, one person in the organization sees it one way, another sees it another way, and they start thinking about, oh my gosh, we missed this. So it's a way for them to say, okay, we got to make sure we've got all of this, these insights and this information, and oh, we forgot this data set, and then what happens if we infuse it with this data? Is it going to tell us something different? Being able to predict using that AI and machine learning and changing things up. It's also about, I think, being intuitive and easy to use, so that as you look at the information, not only does it give you the insights, it allows you to extrapolate in your mind and say, okay, well, what would happen if we did this? And then go do that prediction and see what's going to happen with it. So I really agree with you. It's those underlying tool sets, but it's bringing it all together so you can look at it in one facet and work with your organization that way.
Mhm.
Yeah, definitely. It sounds, we used to say, I worked previously in a data, very prominent data ISV, and we would say we're taking it from data to actionable information. And that's really what I hear you saying, is like bringing in all of those different points together and making that actionable information from it.
Mhm.
Okay, we're almost done with this section. Just one last question, and we do have the question, are there any stories or a business forecasting at year end making an impact? Like we have talked a lot about what we have seen, but is there one kind of use case that you can maybe dive into a little bit?
Sure, sure. So, one horror story that I've heard, and this is a subtle one, right? So, the business was doing their projections at the end of the year, and the projections were saved in British pounds, which was, just fine. But then when the whole point was that they should have been saved in euros, right? So while, I'm sure, for a lot of folks, the layperson, you look at that and say, well, that's probably pretty close. But that variance of about 30% didn't get caught until the end of the quarter, right? So the end of, the start of the next forecasting period. So the variance was off by like, a crazy amount. I mean, for a lot of forecasts, you're looking for a variance of from actual, you're hoping for less than like 5%, but simply by getting the currency conversion wrong, it's a simple human mistake. British pounds to euros. You saw a projection that was basically useless, right, at that point, because it was just so far off. So, those kinds of things are also reasons why not only do you want to have, machine learning and AI involved in in sort of the insights and the calculation, but you also want to involve, um, you know, those kinds of technologies in sort of the review and sort of oversight of your forecast, going forward. It should have been caught. It should have been caught early, but it definitely shouldn't have, sort of permeated all the way through to the end of the quarter. So that was an example that I've sort of been exposed to, and it's a simple mistake.
Yeah, I agree. I've seen similar things where organizations have said, okay, we're going to roll all this up, we're going to put all this together. And oh, by the way, they miss like putting in 3 employees,
Ah,
another facility site, and
right.
changing things up. And at the end, they don't even have a budget tied to a forecast that's even going to support the needs of the business. So then they're asking for forgiveness and to get more. And instead, they end up losing money and end up completely changing things out. I've seen people lose their jobs from doing it wrong. So it really comes down to doing the right thing.
Yeah, and then
Definitely.
and then one thing I want to make sure is understood: these kinds of mistakes, to Mickey's point, they're not just sort of places where you hit, delete and then put in a new value.
Mhm.
Sometimes they impact people's lives, right?
Yep.
They impact people's jobs. These are folks, these are people's, it's their livelihood that we're talking about. You know, that difference between, you know, something that's funded and, you know, happy Christmas, and something that goes unfunded and it's pink slip time. So it's very important stuff that we're talking
Yeah, and I like, we're ending this fireside chat, and usually, in a software, right, that QA is at the end, but you do need to be QAing throughout this, both the human kind of error side and the tools and systems that you're using. And so it's not in your next quarter. That's a really good, I think, spot to end this. Thank you so much for the chat. I will now transition it over to both of you to share some of the latest research that you have, and let us know what's happening in financial budgeting and forecasting.
Super. So I think I'm going to start it out here around the digital first strategy. So what I want to make sure that our audience knows today is we've gone through these, what we call winds of change that have happened over the pandemic, with everything restarting, reshifting, or refocus on automation, re-looking at your organization, how it's structured. Do you have a hybrid workforce? You know, so many different variables with it around the COVID pandemic. And we've kind of emerged from that to say, okay, great, we can handle a lot more than we thought. We've changed our dynamics, the way we run our business and what we do. However, what we're also realizing that these winds of change have now become what we're calling at IDC storms of disruption. So geopolitical threats, economic uncertainty, supply chain issues, talent issues, inflation. I mean, the list goes on and on and on. And depending on what day of the week it is, to what hour of the day it is, to what minute it is within that hour, things change all the time. And so what we're seeing is organizations are starting to counteract this. It's no longer about digitally transforming the organization. Yes, that's key. It's fundamental. It's part of it. But it's more about becoming a viable digital business. All right. I think I have another slide here. And that viable digital business is really around characteristics of processes, products, services, and experience. It's about 95% of the CEOs that we speak to in this last year have said they are moving to a digital first strategy. They want to run a viable digital business. In fact, we see so much so that 41% of the revenues by 2027 across at least the G2000, from what we can see at IDC, are going to have revenue tied into a digital business element, right? So it's really flipping it up from an on-hand personal approach to something that's more digitally enabled. Part of those characteristics are that digital first strategy, the CEO pushing it to the next level. It's about using technology to compete. So if you think about this fireside chat we just had, right? Technology is sitting there helping you pull the data together, no matter if it's internal or external data elements. It's moving you past the static of spreadsheets and of rolling up information and aggregating it and taking forever to get to the next level and then make a decision. And oh my gosh, we got to make a change, and that's going to take 2 more days to make the right decision and have a discussion on it, to something that says, oh my gosh, well, what if we did this, or what if we did that? Oh, I didn't realize that we were doing this. And it starts to help you from an investment standpoint to say, where do we need to go for the business? How are we going to run the business? And how are we going to get it to the next step? It's also about taking that business value and quantifying it, making it digital, enabling it, bringing more automation in. I think I have another slide here that also talks about further characteristics around the fact that organizations want that evidence-based culture. Kevin said it so well during the fireside chat. It's about the data. It's being data-driven. It's about looking at what's going on. And then it's taking automation, so the technologies, the innovation of AI and machine learning and so many others, RPA and whatnot, and bringing it out to the forefront so the organization can see it and understand what it means from the insights it's bringing, not just, oh, we connected data points, we finished a transaction. It's all about getting that information, that overflow, right? So it's really about shifting it. So I'm going to transition this over to Kevin now, but what I want you to think about is, as we move into this, think about what that FP&A, in fact, the financial planning and budgeting and the whole aspect of it, what it means to the organization as it shifts into becoming a viable digital business. It's really changing the trajectory of it. Kevin?
Yeah. And from there, you know, I'm happy to dive into the CFO role here. as the world around the CFO becomes digital, next slide. Yeah, of course. Thank you. The world around that CFO becomes digital. It's going to require a new evolution within the role of the CFO. What we saw, we have some data here that points to the idea that one of the key issues that the CFO was sort of dealing with was they're becoming more involved in IT decisions. They're becoming more involved in the business planning and strategy. So we have a position now that's moving away from being a bean counter, being a person that just sort of checks the boxes when it comes to financial reporting, toward being a much more strategic, sort of node within the business. And then at the same time, you've got the world of finance and sort of IT sort of coming together. When I was at a recent conference, someone who I really respect sort of laid it out for me. And I'm not, I told him I wasn't going to steal it, but here I am saying it anyway. The idea is that the CFO now is quickly transitioning to the CDO, right? Chief Data Officer. So what does that mean? What does that mean for the CFO? It definitely means that the world of the CFO and IT, they're coming closer together. The skill sets are merging. So we'll definitely see that start at the CFO level, where you've got much more of a data-minded CFO, because he's dealing with much more of the data management issues as he gets asked to do more complex and more strategic, activities like planning and budgeting and all of those sorts of things. So that's the dynamic that we're working with here. Next slide.
Hey, Kevin, I just wanted to ask you, do you really see the CFO going from like a reporter and looking at static information more to a CFO that's coaching and advising the business, which is where this technology piece can help?
100%. I see, one of the first places, just to give you a quick anecdote here, during the height of the pandemic, early on, that first quarter or Q2 of 2020, when no one knew what was going on, right? They just knew everything was going crazy. The first stop for a lot of CFOs, for a lot of CEOs, excuse me, the first stop for a lot of CEOs were the CFO and the FP&A team, right? Because they were the only ones that would be able to help the CEO look out into the future and cope with all these unprecedented things that were happening to the business. That has not changed. The idea of looking at dynamic data, looking at sort of future data, again, not just sort of making forecasts, but then also building those forecasts on data that you already have. There's been a lot of movement toward building forecasts based on contract, the contract details, building forecasts based on much richer visibility into accounts receivable, right, and the order to cash cycle. Those sorts of trends are now sort of very much tied to the ability of the CFO and his team to harness data from a number of different sources. I've got one I've got one controller who not only does he have his AP and AR, and of course his treasury team underneath him. He also has the sales planning team underneath him. He also has the contracts underneath him, right? Because he's finding that the way the contracts are set up, currency, for example, or what have you, dictates how fast we can turn that that order into cash, right? So it's all connected. But the idea of that connectedness brings an entire amount of data management problems. which is now what the CFO has, sort of his new mandate is to sort of harness those data flows.
Yep.
All right.
Great.
So
Thank you.
I'll quickly hit this one here, and we just sort of talked about it. The idea is that the mindset is shifting away from being very today focused or even rear focused, right? A lot of FP&A is looking at the last 3 or 5 years and saying, okay, how do those patterns impact tomorrow? Well, what if the last 5 years were weird? They were just simply strange, um, and we don't know what the next 3 are going to look like, because what turns out this year was even stranger, right? So this idea of looking backward to look forward, while there's still value there, it has now to be paired with a much more predictive, more customer focused, outcome focused sort of mindset. And we're starting to see that. We're starting to see that sort of proliferate through all of the financial application areas, but very much in the sort of data heavy areas like FP&A and budgeting and planning. So next slide.
Great.
And I'll speed up here. Forecasting moves to the front line, just like I said earlier. There's pain where there is data, right? The data problem is becoming, sort of the new battlefront for CFOs and the office of the CFO, the office of the CFO, all the folks that sort of work in there or report to the CFO. Forecasting and budgeting. We're talking forecasting your payables going out. We're talking about forecasting your cash, your liquidity on the treasury side. We're talking forecasting your receivables and your sort of DSO, right? Your DSO reduction, forecasting that, and then rolling all that up to the budgeting and planning team, doing that all at scale and at speed. Is just a nut that a lot of organizations find to be really tough to crack, right? So we see data like this. We see that 3 out of 5 say that making improvements to their their forecasting and budgeting is very important, or the most important thing they're going to do in 2022. A similar sort of thing when you look at the breakdown between line of business and sort of the C-suite. The line of business is where the hammer falls the hardest when it comes to the data management issues. So of course, they're the ones that feel it most acutely. They're the ones that are screaming out loudest for tools and sort of help when it comes to doing the forecasting and budgeting, sort of plans. We talked about it, and I'm not going to spend a whole lot of time on it, but just to say that spreadsheets are still around. I've talked to a lot of small businesses, point solution folks in the AP space, AR space, in the forecast budgeting planning space. And, if you ask them, to rate their number one competitor, most of them will say spreadsheet. Microsoft is everyone's number one competitor, just because in either in total, which is rare, or in part, which is pretty common, the idea of spreadsheets augmenting key financial application areas, again, especially where you're talking about some of these nexus points in the financial operation. So financial close, budgeting and planning, these sort of nexus points are just rife with spreadsheets. And the problem there is that you're talking versioning control, you're talking about, missed digits and, sort of missing cells, broken formulas. We've all been in spreadsheet hell. And, that's where a lot of the pain comes from here in the budgeting planning process.
Definitely.
So again, point of frustration, top 2 frustrations, period end, and the reporting process is super slow, right? Our forecast insights are extremely limited. So what you've got is this desire to move faster. Again, not because they want to. No one wants to, move faster. It's because they have to, right? The world around them is becoming more dynamic every single day. And to Mickey's point, even by the hour, right? By the minute, the world around them is moving faster. So what they want to do is get real, actionable, actual data up to the CFO and the FP&A suite so that they can do their plans. And they want to shorten that time. And then they're having trouble infusing that data with insight. So that's what you see here, the top 2 frustrations in the Americas when it comes to their financial accounting systems. Slow reporting, close, and then difficulty infusing that data with insights. So then future outlook. One of the things that I wanted to show is that we have data that proves what we kind of already know. Everyone wants a more integrated experience when it comes to issues like the financial close or the budgeting and planning process. Again, naturally, these are points where data have to converge, and it has to converge at speed. So to do this process and to do it well and to do it with enough pace, it really does help to have all of that information readily available, readily visible into one single pane of glass through which I can see my, all these different data flows, so I can start making my plans and building for the future. That's what this chart's saying. And it didn't matter when we asked the question, it really didn't matter how we cut it based on geography. It was all the same thing. Overwhelmingly 7 to 8 out of 10 were saying, yeah, we'd like a more integrated experience for this kind. Embedded flows, right? We're starting to see a bunch of movement toward embedding functionality within the current accounting systems, right? So we're starting to see the inflow of vendors saying that we're going to embed payments, we're going to embed lending, financing. These are all options that, while they provide more functionality for the day-to-day operations of the office of the CFO, they also complicate the budgeting and planning process, and they necessitate even further investment when it comes to a modern cloud-based, intelligent, predictive. I'm trying to come up with all the great adjectives here, but those are the systems that are in demand now, and with this sort of trend happening, the embedded finance trend, what we're going to see is that trend is going to grow even faster. Next slide. So what to look for? I put this in as sort of a capstone. What to look for as you go out and you're looking for a solution to help you with all the complexities and all the sort of scary things that we've talked about today. You're going to go out, you're going to look for things like cloud first. Cloud first allows you to have some flexibility. You're going to look for data security. Data security is going to be top of the list. But I think what's really going to be important is that, because forecasting is a dance that's done between a number of different departments, and by necessity will need to include a bunch of different data flows, both internal and external. The thing that jumps out at me is looking for a partner, looking for a vendor that has built up their partner ecosystem such that you can trust the folks that are in there, that they've been vetted to a large degree, that that the information will input and integrate seamlessly into your workflow. For me, that's the one that stands out. Mickey, do you have any thoughts on what they should look for in this kind of solution?
Yeah, I know. I like everything you have here. I think the other things that they should be looking for might be collaboration, right?
Oh
Being
yeah.
able to work across, so that's that visibility aspect.
Mhm.
I think typically in Cloud First you get that anyway, but I just don't want to miss up on that. And the only other thing that I see here that I think would come in is an intuitive and easy look and feel, so that somebody can go in there, make the changes, move forward, and go on. But I think you've got the main data points and the main aspects, Kevin. You've really done a nice job here.
Yeah, thanks, Mickey. That's great info. And then look, one last thing that's not here is the idea of trust, right? What you're looking for in a solution is not trust, but what you're looking for in a solution provider is trust. So you're also looking for folks that are investing in their solutions. So you're looking at their roadmap. You want to see that they're putting out press releases talking about new features and new functionality that will push your FP&A or your budgeting and planning system, or in some cases your corporate performance management system, right? Pushing it forward, and they're investing in it, and they're all in, right? So that trust level is something that you can see, and it's right there written on the sleeve of any business that you want to see. It's in their press releases, it's in their conferences, it's in the amount of investment in marketing that they put behind their solution, to kind of push it forward.
Great. Thank you. Oh, I've lost the slide deck here. We'll get there. So again, thank you, Kevin and Mickey. We really appreciated all the time you spent with us today. We do have a couple questions. If you still have time, this is
Sure.
where you can find some of this information. And oh, we said sure. Okay, let me make sure I can find that. I just have to look somewhere else on the screen here. Okay, so one question is from a current Sage 100 customer, and they're wondering, 10 years into the future, how you envision small organization structures changing based on finance and IT becoming more closely linked. Do you see an IT skill set as being critical for finance professionals, or are these roles merging?
Yeah, look, I think going forward, we're going to see a shift toward the finance role having a lot more of the computer engineering, software engineering, data, business analyst, data analyst sort of skill sets worked in. And I'll go as far as to say I've talked to some CFOs that are experiencing a lot of turnover in that core, sort of office of the CFO role, like the staff accountants, the AR clerks, and sort of even at the controller level, there's a lot of turnover, right? That turnover really sort of slows the business down and sets the business back quite a bit. And if you're not careful, turnover all by itself can sink a financial plan, right? So one of the things that we're definitely seeing, and the conversation kept going with that one particular CFO saying that, hey, I'd rather now take a data analyst and then teach them accounting, as opposed to taking an accountant and teach them, sort of data management, data analytics. But the mind shift there. 10 years ago, you wouldn't have heard a CFO say that kind of. But now, more than ever, these roles are must come together. I'll tell you one more anecdotal story. I was talking to a mid-sized CFO, mid-market CFO, actually in the food and beverage space, and there she was the CFO. She was also the CIO. She was the chief information officer, right? So the idea, in some cases of these roles, not only are they, some skill sets are crossing over, in some cases, they're becoming the same role.
Mhm.
I agree with Kevin, although I would add some context to it, and I think it's this. I think technology is now becoming much more commoditized, moving itself into an area where it's the products are bringing standard workflows into an organization. They're helping the organization get set up once and for all, moving away from customizations, making things simpler to understand. And you see a lot of organizations saying, IT is trying to re-articulate, bring the business to a next level. And so what's coming up are a lot of citizen developers that are kind of doing that last mile. Let's make it an industry solution better for this industry and the way we do our manufacturing and how we tie it back into the customer so it gets the customer faster. That's all great. But as more of this becomes, and commoditized, by the way, I don't mean every solution is the same. That's not my point. My point is that it's becoming in such a factor that technology can be deconstructed and reconstructed and reused and moved to different scenarios such that anyone is going to be able to start doing more and more with this over the next 5 to 10 years. And as crazy as this sounds, how many folks out there had an iPad or iPhone and then went to bring up an app and didn't know what they were doing, and now they just click on an app and they pretty much can figure anything out. So technology and the pace of innovation, the way it's changing, is really helping an organization to say, how do I get there using this resource much better, and how does it make me a better organization?
Absolutely. And then just to add one tiny point to that, and in violent agreement with you on that, Mickey, companies are putting a lot of work and effort into, the UI, the user experience from their solutions to Mickey's point, to shorten that curve so that, people can pick it up quicker. They can find things faster. So the user experience is definitely an investment, a point of investment going forward for a lot of vendors.
Definitely. All right. Well, we have taken your time and our audience time today. We really appreciate it. Is there anything you would like, any last thoughts you would like us to end on, or are we good to
I
wrap
have
up?
one. I have one,
Okay,
and that
perfect.
is I want to thank everyone for the time today. Kevin and I always have a great time going around and talking about different
Mhm.
issues and doing different things. And it's really a lot of fun when Elise sets us up to have these discussions. So Elise, thank you to you and the SAGE team.
Yes.
And most importantly, thank you to our audience for listening. And all of us are happy to answer any questions you might have in the future.
Yes, that's great. The slide that I really skimmed over is where you're going to find all of this. And of course, we will have the recording posted and the deck or the information for IDC as well. So again, thank you both so much. Thank you everyone who joined us today. We really, really appreciate it. And we wish you the best rest of your day. Thanks everyone.
Thank
Thank
you.
you.
Bye.